Aber 45. Today we got a major story. OM coin, once trading near $6, has crashed over 90% in a matter of hours. In today's update, we'll break down what caused this dramatic drop, address the swirling insider and rug pull allegations, and look at how the management team is planning to get back on track. Stay tuned, because we're diving deep into the events that left billions of market cap evaporated, and what it means for investors moving forward. Let's start with the basics. On Sunday, OM coin plummeted from around $6 to below the half-dollar mark in less than an hour. This meant that billions in value vanished almost overnight. Some reports indicate over $5 billion of market cap was wiped out, with nearly $227 million worth of tokens suddenly moved from wallets to exchanges by multiple holders. The sudden liquidity move was enough to trigger panic selling among investors. Reports from sources like CoinMarketCap and Cointelegraph highlighted that forced liquidations, when accounts using OM tokens as collateral are automatically closed by exchanges, played a huge part in this collapse. It wasn't simply a matter of market sentiment. Algorithmic triggers and low liquidity trading hours compounded the situation. Price drop, $6 to $0.50 in under 1 hour. Liquidations, over $70 million triggered immediately. Market cap, reduced from nearly $6 billion to below $700 million. Section 2, insider speculation and team reaction. Now, all eyes have been on insider activity and allegations of a rug pull after noticing that a substantial number of tokens, around 4.5% of circulating supply, were transferred to exchanges before the crash. Some early reports even linked these movements to strategic investors like Laser Digital and Shuruk Partners. However, in recent AMA sessions and public statements, Mantra CEO John Mullen made it clear that the team denies any insider dumping or rug pull schemes. According to Mullen, this collapse was not engineered by the project itself, but was instead the result of reckless forced closures from centralized exchanges during low liquidity hours. He also explained that widespread misinterpretation of on-chain data has fueled these rumors. While on-chain analytics from platforms like Arkham and Lucan Chain flag suspicious movements, both Laser Digital and other key stakeholders have publicly refuted any claims of coordinated sell-offs by insiders. Display key quote from John Mullen on screen. Guys, I just woken up and I'm getting a complete breakdown. A massive forced liquidation occurred from a large OM investor on a CX. This was not an exit scam. Section 3, the recovery plan and what comes next. Amid the chaos, there's a silver lining. The Mantra team isn't standing by silently. They have announced a two-pronged recovery strategy. 1, token buyback program. The team plans to use available funds to purchase OM tokens from the market. This move is aimed at boosting buying demand and stabilizing the price. 2, utilizing the $109 million ecosystem fund. Originally earmarked for protocol development, this fund will now help support the OM token's value recovery. Early signs hint that the market may be slowly absorbing the shock, with some reports showing a modest bounce up to around 60 cents, though these remain fragile levels. Experts caution that while buybacks and recovery measures can help, the overall trust in the token will depend heavily on transparency and improved liquidity management going forward. Display visual chart of recovery attempts with highlights of the ecosystem fund announcement. Section 4, analysis and what investors should watch. Here's what you need to know as the story unfolds. Market volatility and liquidity. Forced liquidations and algorithm-triggered sales have exposed vulnerabilities in tokenomics and liquidity management, issues that are reminiscent of the infamous Terra Luna collapse. Investor caution. Many in the community are urging caution. Given the concentrated token supply and the volatile trading environment, experts warn against trying to catch the bottom without clear catalysts for stabilization. Long-term impact. With the team now actively communicating and planning recovery measures, the coming days will be crucial in restoring investor confidence. Watch for further transparency reports and any additional adjustments from exchanges, as these will offer insight into whether OM can truly rebound. Before you make any moves, remember, every crypto investment carries risk, and events like these highlight the importance of deep due diligence. Show call-out graphics summarizing key risk factors and recommendations for safe trading practices. Conclusion, wrap up and call to action. To sum it up, the OM coin crash was driven by a perfect storm of forced liquidations and market misinterpretations, fueled by low liquidity and rapid algorithmic triggers. While rumors of insider actions and rug pulls continue to circulate, CEO John Mullen's statements and the new recovery measures provide some hope that the management team is taking proactive steps to navigate these turbulent waters. What do you think? Can the OM token recover? Or is this just a temporary blip in an otherwise volatile market? Drop your thoughts in the comments below.